Hey everybody, so this upcoming week is probably going to be pretty crazy. So I just wanted to brief over the news very quickly. Starting with Monday, we're going to have Monday off. It's Juneteenth. So the entire stock market is going to be closed that day. Futures are still open. Bitcoin is still open. So we could kind of follow what we might think will happen for the rest of the week, just following futures and Bitcoin. We're also going to see a lot of existing and new home sales this week. So we're going to get that data come out. We're also going to get the bank stress test, as well as Fed Chair Powell and CPI for Canada and the UK. So it's kind of a heavy week this week. And also on the same page, I also have the risk ranges on this lower tab right here. So I'm going to link this Excel spreadsheet down below. And without further notice, we're going to go straight into the technicals because there is a lot to cover. So going straight into the technicals, I'm going to start with Apple. So just looking at Apple, I mean, we left some gaps up here. So there's always this chance that gaps can get filled. But if we're just looking at the sell-off, it is so accelerated right now. Let me throw on the Bollinger Bands. So we're basically at the bottom of this Bollinger Band. And this bottom Bollinger Band is like 128.42. We're really not too far off from that. So we are kind of getting a little bit oversold. But do keep in mind that in these type of markets, oversold can easily become full-blown crash. So always keep that in the back of your mind. Now, Apple is kind of approaching this bottom trend line, as you can see. I mean, if we're just looking at this, Apple could basically come down to this 126-ish level by the end of this week. So if I'm taking off this Bollinger Band right here, I'm thinking that we could see this nice little shelf of support right here around 126.37. And it's basically hitting this support right here and this prior resistance right here. So this could be a shorter term area of support if we don't just see full-blown capitulation. Now, if we do see full-blown capitulation, I think what it'll look like is basically just a straight down movement all the way down to potentially this 115.48 level before we take a breather. And then if we were to see even further selling from there, well, I think we go all the way down to fill this gap. And now, one other thing I do want to point out is if we go on the weekly time frame, that gap lines up almost with this 200-day weekly moving average. So this 200 weekly is at 98.47. If we're looking at this gap right here, it's basically covering that region right there. So it's basically this right here, which is right around 99.77. That goes as low as 95.14. So I do think that that could be a very possible max pain area that we could bounce off of. So do keep in mind that we could always fall further than that, but this is kind of what I have outlined for max pain. And I don't even want to know what QQQ or SPY would be if Apple fell down to those levels. Now, going straight into QQQ, if I'm looking at this right now, we're basically right on this trend line. So as you can see, we're pretty much right on this trend line. You can see we bounce right there, bounce right there, bounce right there. Are we going to get a bounce right here? So that's the big question. Or do we break underneath? And if we break underneath, what's going to happen? So this is kind of what I have drawn out for us. If we go on the weekly time frame, we have this 200-day weekly right here, which is at 260.99, basically 261. And if we look where this is actually catching, it's catching this old area right here. So this is kind of like a brief area of support. Now, I don't think it's strong support. So that's the kind of scary thing right here. But this is a strong area that we could potentially bounce off of because we have this 200-day weekly sitting right here. Now, if I do zoom out a little bit, this also lines up with this line that I have drawn here. So this line that I have drawn here is basically catching this former top. And if I zoom in right here, it's catching these bars right here before we had this massive breakout. And it just so happens to line up with this 200-day weekly. So I do think that this could be a strong area that we could potentially bounce off of. But I don't think that that could potentially be the bottom of this market because keep in mind, we do still have earnings. And if earnings do come out poorly, I think it's very possible that we could easily break underneath this 200. And where we go from there is honestly, it's a big question because I mean, there's not a whole lot of support here. If you zoom out, there's really not a lot of support. So things do get dangerous if we break underneath this 200 weekly. Now with Microsoft, if I'm just looking at Microsoft right here, we broke below this area of support. So as you can see, we bounced here, bounced there, broke underneath momentarily, broke above. Now we bounced down here. We bounced up here, we rejected, and now we're kind of sitting in between. So as you can see, this area that we bounced off of was this prior resistance right here. And it was kind of support right around here as well. So, it's entirely possible that we could just move back and forth in this kind of like wedge right here. And then maybe we'll break out or break up. So if we do break below this area right here, this 241-ish area, then I do think things get pretty nasty. I mean, I would think that the next solid area of support is likely around right around here at around 222, which was acting as resistance in this area. And if we do break underneath this, then I think it's right around 213 is that next shelf of support, which is basically this area right here. And then if we do break below that, then I'm thinking 194.83. Now, if I go on the weekly time frame and I look at where this 200-day moving average is, well, this 200-day weekly is at 228. So it's basically right around this shelf area right here, which was the support that I pointed out. So basically right around here. So that is kind of like the worst case scenario that I have drawn out. But I mean, at that point, the valuations go down significantly on Microsoft, and it does look a little bit more attractive. Now, with Google, Google's interesting because we do have that stock split that's coming up in July. But if we look at what happened to Amazon, I mean, if we recap Amazon basically, it rallied pretty heavily for that stock split, but the rest of the market was not rallying with Amazon, and that's the key thing to take away. The rest of the market was fading while Amazon was rallying. So to me, I think maybe the same thing could happen with Google. Maybe Google rallies on that stock split, but the rest of the market does not follow. So once that stock split is over, I think it'll just be the sell the news again. So do be careful of that. And if I'm looking at Google right here, we do have this support line, and we could just continue to fall and possibly hit this bottom support line again. Now, if we do hit that bottom support line, it coincides with this gap right here. And this gap fill is going to take us all the way down to 1,953. Now, if I do look on the weekly time frame, we do have this 200-day moving average that goes all the way down to 1,770. So that's a pretty nasty fall if we do make it down there. So, I mean, that's going to look pretty ugly. And that's basically going to take us, oh boy, that's like a little bit over 10%. That's like maybe 15%-ish. So it'll be quite the fall if we do make it all the way down here. Now with Tesla. So Tesla's kind of interesting here because it looks like we could have a potential double bottom right here. If you look down here, you could kind of see this potential for a W pattern. But where can we go? If we do rally off here, I do think we see significant resistance right at the 700 level, which is basically this February candle that we drew here. But if we do break underneath this area, oh boy, I think it's going to be a flood of selling. So this flood of selling could literally take us all the way down to 537. And then underneath that, oh boy, we don't even want to get there. I mean, literally, if we break this level right here, there's not solid support until maybe 356. So do be careful, you guys. Be very, very, very careful. Now I'm looking at SPX. The reason why I'm looking at SPX is because SPY had a dividend. It was Friday, I believe. So SPY had a dividend on Friday. The X dividend was on Friday. So I want to go off SPX instead because it's going to be a little bit more accurate. So if we're going off SPX here, we basically broke underneath this trend line. And if we just look right here, we built out a doji candle. So this is kind of like an indecision candle. Are we going to go back up or are we going to continue fading? So now if I look on the weekly, the weekly 200 is sitting right here at around 3,502. So we could still fall another, let's see, what is that? About 4%. We could fall another 4% here. So could be accelerated selling here in the shorter term, possibly. Or we could potentially get back above the support trend line and we could rally. I mean, we still do have all these gaps here that we need to fill. So there's one gap right around here at 3,900. There's another gap all the way up here at around 4,000. So, I mean, it's hard to say. Either we fall all the way down to that 200 weekly and then maybe we could see a strong rally, or we rally off here and then we fill those gaps and then we fall. So that's my take on SPY. Now XLF looks so ugly. This is a big reason why SPY is fading so hard because the bank stocks are literally getting murdered. So if we're looking at XLF, which is tracking the financial sector, its largest holding is, I believe it's JPM. So you can see that we clearly broke underneath this area of support here. Or actually, I'm looking at this one. My bad. So I'm looking at this area of support. So this support line. So we clearly broke underneath that. And I'm going to have to go on the yearly time frame for you guys to see that. So when we did break below that, we had this massive gap down. And, you know, this could possibly be a potential support line that we have drawn right here. So we'll see if we bounce off this. I mean, I'm not having too much hope for this line right here. But this line right here is pretty important. It could act as resistance going into the future. So, I mean, XLF sold off so hard, and we could go up and fill these gaps. So, I'm going to pull on the Bollinger Bands just to show you how sold we are. So, basically, the lower band is at 30.47, and we were basically there. So, we're at 30.93, so it's not too far off. Now, the one thing I do want to point out on XLF is we have this 200-day weekly as well. So you can kind of see a theme that I'm building up. I'm constantly talking about this 200 weekly, and we're seeing a lot of indices approaching this level. So this 200 weekly is at 29.36 for XLF. So we're not too far away from that. So if we do bounce off this level and we see a hard rally, we could potentially fill all these gaps right here. Now, I want to talk about XLE, which is the energy sector. If I'm looking at the weekly time frame, look at this massive red bar. When you see something like this, generally you see continued selling. So I wouldn't be surprised if we do see continued selling on XLF. Now, I also do want to note that on XLF, you can see that we had this breakout. So let me take out the moving averages for a second. So when we had this breakout, we were in this little wedge right here. And then we clearly broke out right here. So what I'm thinking is that if XLF continues to fall, it could potentially find support at this upper resistance. So this was prior resistance right here. This could act as support. And if this doesn't hold up, then I do think that this support could possibly hold up. And then we'll see where things go from there. And then if we do introduce the moving averages again, the 200 as you can see, the 200-day moving average is lining up perfectly with this resistance line. So I do think that if we do see continued selling, we could fall all the way down to this 65.77 level, which is the 200-day moving average. Now IWM looks so bad. And I'm going to show you exactly why it looks bad. So I'm on the weekly time frame. This is the 200 weekly. We fell underneath the 200 weekly on this one candle right here. So the 200 weekly is at 173.42. We're at 165.18. So, this makes me wonder, okay, are we going to continue to get oversold? And are we going to fill this gap? So if I just zoom out right here, we have this gap that we actually filled right here. But are we going to fill this gap down here? So this gap will take us all the way down to 153.56. And that's pretty ugly. But if we do zoom out here a little bit, we can see that we do have a decent amount of support right here. So this was support in 2018, or I mean resistance here. It was also resistance in 2019. And then now in 2022, it could act as potential support. Now, if I'm looking here, we also do have gaps that we still need to fill. So we have a gap right here at 175 to 177.55. And we got another one all the way up here at 183.37 to 181.31. So we've got two gaps to the upside that we could potentially fill, but things just don't look too good on IWM. I'm just going to be very upfront on that. Now with DIA is a little bit interesting right here. So if we look, we actually broke underneath this support line. But also notice that this is a doji. So literally we could get back above this and we could potentially go back and fill these gaps. That's a big possibility. The other possibility is that we could just see a continued sell-off. Now, there's not a whole lot of support here, as you can see. So what I think could happen is if we do see a continued sell-off, it could be a very quick sell-off all the way to 285. And then we could even go as far as filling this gap right here, which is at 279.40. Now let's take a look at the weekly time frame. So this weekly time frame, the 200 weekly, is sitting right at 285.28. But at the same time, if we go down this low, what's keeping us from filling this gap down here? So I do think if we do continue to fall, I think we could actually go underneath this 200 weekly and just completely close this gap right here. And then maybe we could see some sort of rally. So that's only if we get down here. And lastly, I want to talk about Bitcoin. So actually, surprisingly, Bitcoin is above 20,000 again. And you can see right down here, Bitcoin went as low as 17,596. Now, what really happened in Bitcoin? Well, somebody bought the dip hard on Bitcoin, and you know who it was? It was Binance. So Binance actually bought the dip. They bought 100,000 Bitcoins, which was worth about, it was worth about 1.94 billion, as you can see here. So they bought the dip hard. Now, if we do break below this 17,596 level, basically that means Binance's $2 billion buy literally went down the drain, and that would be such a bearish look. So if we just fade all the way back to these levels, it basically means that Binance bought $2 billion worth of Bitcoin and absolutely nothing came of it. Just means people shorted the hell out of it, and Bitcoin is in such a strong bear market that their tiny little buy didn't even matter at all. So right now what I'm noticing is that we are seeing this kind of uptrend, but we did break it in the shorter term. So does this continue to act as resistance? It's kind of what I'm thinking. And if we do zoom out a bit, we do have this resistance trend line here. Now I have a lot of lines drawn over here, so I'm just going to take a lot of these out just so you guys can see things a little bit more clear. All right. So as you can see, we have this resistance trend line right here. So if we do start rallying up from here, I do think that we could potentially hit this top resistance line. So that's only on a strong rally. Now, there is one caveat to this. If I go on the weekly time frame, there is this 200-day moving average that is going to be such a pesky resistance. It is 22,404. If we do happen to break above this, then that's where I think that this situation could take place, where we actually hit the top of this trend line. And then if we hit the top of this trend line, well, then a lot of things could happen. You know, we could just hard reject, or maybe we could bounce back. And then by that time, you know, we get a little bit closer to this 50-day moving average. And do we get above that 50-day moving average? So I know I'm talking a lot about the future, and right now Bitcoin can't even hold 20,000. So what's going to happen, honestly? So a long time ago, well, I guess it wasn't even that long ago. It was like a few months ago, people were saying, "Oh, Bitcoin's going to be an inflation hedge." But that was such BS. I mean, how could Bitcoin be an inflation hedge when Bitcoin hasn't even been like that long of an asset? Bitcoin hasn't lasted that long. I mean, we haven't seen serious inflation during the life expectancy or during the lifetime of Bitcoin. So now Bitcoin is starting to see heavy inflation for the first time. And during these periods where rate hikes are constantly happening, the dollar is getting stronger, which means that Bitcoin is getting weaker. So, you know, those people who were saying that Bitcoin would be an inflation hedge, they clearly did not know what they were talking about, because now you can see Bitcoin has seriously faded. It was right around 69,000 at the top. Now it's around 20,000. So it lost about 50,000 in value. So that's pretty crazy. So that's basically all the technicals I have for you guys. I hope you guys enjoyed it. And remember to click that link on the bottom if you want that spreadsheet. So have a great day. Enjoy your Monday off. And stay safe, you guys.